sell me on this concept of being your own bank, because I still don't get the message as maybe as much as I see it as an asset, place to store, protect, grow my money. This whole like being my own bank has never fully resonated with me as much as it's resonated with you, Chris, Brent, and others, who they're all going to be on the show. And so I just like, that's just my pushback and challenge, but I'm seeking to understand of like, what is the concept and what is like the aha? Because I find that a lot of people use it as like a technique to sell, but like when you actually drill into the numbers, they're not as good as we might think they are. And I'm a big proponent, like I overfund life insurance. That's our main money maker. So we're on the same team. I just don't necessarily use the same language.
Yeah. So for me, it was when I realized every dollar that we spend,
Yep.
it's got one use.
Right.
So if I buy this phone,
yes,
$1,500 or whatever
Yep.
it was,
you're taking money from your account.
that $1,500 I'll never get back.
Yep.
I got the phone.
Yep.
Right. The phone can make me money.
Yep.
Or it can cost me money because it'd be a distraction.
Totally.
But the opportunity cost of that $1,500 is gone.
Forever.
I'll never make another dollar off it.
Yep.
And I started realizing that, okay, if I fund this policy, every single dollar that goes in, I'm never losing the opportunity cost. It's guaranteed. It'll continue to go up. Guaranteed. Tax-free. Then I can borrow against it.
Right.
And use the money to buy the phone, or
Right.
use the money to do an investment, use the money to go on a trip, use the money to do whatever. And then as long as I treat my money like I would treat the banks, pay myself back with interest,
Right.
I'm making a spread just like banks do.
Okay.
Right? Because if the insurance company charges, let's say 5%, and I charge myself 7%,
Yep.
I'm making 2%.
But you can, so we'll unpack that in a second. So let's put a pin on that about the spread, because you're intentionally paying yourself more.
Right.
Which I think sometimes confuses people. But you're getting a spread because you're literally paying yourself more because you don't want to steal the peas, as R. Nelson Nash talked about in his book. So you are not going to devalue your number one asset.
Right.
So you're going to intentionally pay yourself more, but that gets people confused a little bit, because it's like,
But it's not paying yourself more. It's paying yourself what you would have paid the bank.
okay.
So like, let's say if I can get a bank loan for 3%,
Yep.
and I take a policy loan at 5%, that doesn't make sense.
Right. You'll just pay yourself back at 5%.
Right. Or I'll just
Take
use the
loan.
bank's money.
Yeah. It's a thought crime.
At
sometimes.
3%.
Yeah. Yeah.
Right? That's not happening right now. But
Yeah.
if I could get money at 3%,
Yep.
I'm going to get that all day long.
Totally.
Instead of getting it at 5% from a policy.
Yep.
You see what I'm saying?
Yeah, and I agree with that. Yeah.
So it's just, I started realizing like, okay, if I put money in a policy, it will 100% grow. And then I started thinking more long-term. Like,
Right.
I think this is a problem that most people have, is they can't see more than 5 feet in front of them.
Agreed. It's a huge problem. People have not, because they have lack of vision.
Yeah. So it's like, they don't think of a year from now, 5 years from now, let alone 10, 20, 30 years from now.
Yeah.
But I've been lucky enough to not have to like mourn any deaths in my family.
Yep.
Like of anyone that I'm really close to. I've had grandparents die, but I wasn't really close to them.
Yep.
They all died in their 90s. So I'm like thinking, okay, I live a healthier lifestyle than anyone in my family.
Yep.
I'm probably going to live a long time, God willing. When I started looking at illustrations of when I'm 80, 90, the compound interest is silly. You put in $1, you get like 30 back. While I could use that money while I'm alive at the same time.
Which is, that's the key.
Yeah.
That's the key. Because people will comment and say, guys, the stock market will get way better. And they may be not wrong. But life insurance is not an investment.
Right.
And the whole concept of when you pulled out your phone, it's like the epiphany, I can do this and this.
Right.
Over 30, 40 years, that's depending on you as your track record as an investor.
Right.
It gets pretty exciting.
Yeah. And then we can definitely go into the whole, but the stock market does this and IULs, but that's looking at an investment, right?
Yep.
Insurance is simply a storehouse for capital.
Right.
That's what I look at it as. I want to store as much there as I can. A couple of reasons. In a policy, it's protected against lawsuits and judgments in most states. If I've got millions of dollars in the stock market, it's not protected, right? Could this do better? Probably. But There's actual returns and
What's
average
one-dimensional?
returns, right? Everyone just mentions average returns.
Yep.
What's the actual? So is it actually better?
Yep.
It's not protected. When you pass away, everyone does. It's guaranteed to happen. If you've got all this money in the stock market, your family's going to get that, minus the taxes. They're going to get taxed on it. You put all this money into whole life insurance with a mutually owned company that pays dividends. When you die, again, guaranteed to happen, they're going to get a multiple of that, tax-free.
Yep.
So as of right now, I'm about $40 million of death benefit.
Wow.
Right?
On your life or your family's life?
My family's. I think me alone, it's like 29.
Wow.
Something like that.
You're like, make your wife happy, dude. She might.
100%. But like, let's just say, just on my life, let's say 30 million. If I was to pass away tomorrow, God forbid, because there's no taxes, that's almost like I had 45 million in assets at my death. My family sells it off. What's left after the taxes, they get 30 million bucks. That's crazy. Like, what else can you do where you put money in, you can use it right away for whatever you want without interrupting the compounding.
Yep.
It's protected against lawsuits and judgments, so no one can steal it from you.
Yep.
And when you pass away, it's guaranteed to give you a multiple of what was in there, tax-free. There's nothing that does that.
You articulated that better than almost anyone I've ever talked to. And that's where I think that's where the conversation needs to go.
Yeah.
Think about life insurance as a wrapper, a protection first. I think we get in trouble if we life insurance is a protection vehicle. We can structure it in such a way that it is a great storage vehicle because there's people that probably use your videos, people that use my videos and book, push their crappy agenda. I'm sorry for everyone that gets ripped off by that. I'm sorry. At the end of the day, a lot of times it's bad actors that will take concepts like life insurance, but then not structure it properly. Right. Everything that you said is amazing. And I actually think that needs to be the message to say, hey, listen, one-dimensional. Maybe the stock market, real estate, investing in business. Like, I'm not trying to say that life insurance is better than those things. Right. I'm just saying one-dimensional, multi-dimensional, and with the and component, you can do both. If you love the stock market so much, do both. Right. Do both. But if you actually start realizing what's going on, you might find that there are other assets, including yourself, that you maybe shouldn't invest in, because it would be a shame for you to have a high stock portfolio but be broken inside. Right. We could go down that road a different time, but it's multidimensional versus one-dimensional. And the multidimensional goes back to creditor protection, goes back to death benefit, goes back to some of the tax advantages, goes back to this chronic illness and critical illness riders, which essentially, I'm not saying it's a long-term care alternative, but I'm saying you get extra options in the future. God forbid things happen to you. Even if you don't die, God forbid things happen to you, you have options. So you have one road with fewer options. You have another road with more options. That's, I think, needs to be the message. I think my pushback to this whole being your bank is when then we get into arbitrage and we're we use dividends, you're getting this. And at the end of the day, when I zoom into the numbers, could there be arbitrage on what you're earning versus what you're borrowing? Maybe in 20, 30 years, if stars align, that could happen. But I find that it's we're missing the point because we're almost we're comparing to the one-dimensional when we don't have to. Right. Over here, what do they got? Whereas if you understand creditor protection, if you understand the $30 million in growing death benefit, you value that.
That's something. It's growing. It's 30 million
but
right now.
But you value that. That's the thing is if you don't value other things, don't do life insurance. Right. If you don't value more options, if you don't value the tax benefits, if you don't value having a death benefit, if you don't value these things, life insurance is probably going to be average or maybe underperform a high yield savings account. That's a thought crime. But it's when you start valuing other benefits than maybe just rate, I can't think of a better asset. Right. So this is where it's this is maybe the thing that I wanted to just discuss on because it's again, I think the people that talk about being your own bank and all that, they almost make it sound like there's just this magical thing. And the magical thing is you give your dollars more wrappers, more jobs, and over time that's really good. But when you look at the internal rate of return and the cost of borrowing, over time it's kind of a wash. but we're discounting all the other benefits. I'll let you talk, but that's
So,
this is therapy for both of us.
I agree 100%. If you really dive into my content,
Yep.
I talk about becoming the bank because like I truly believe like the bigger this asset gets, the more you put into it, the more you can truly be your own bank, right? Like if you've got $1,000 in there, how can you really be your own bank?
Yep.
Right? I've put over $2 million in.
Yep.
So I've got a good amount of money that I can use to be the bank, buy cars,
Yep.
do investments, whatever. So I talk about that. But if you look at my videos and really dissect them, I'm not talking about arbitrage.
Yeah.
I'm talking about creditor protection.
Yep.
I'm talking about death benefit. One of my videos says, I'm like, I bet you have insurance on your house, and it shows a house.
Yep.
I bet you have insurance on your cars. It shows your cars. I bet you have insurance on your phone.
Yeah. Crazy.
But then you don't have insurance on your life.
Yep.
Another one I did is
Which is, can I just double tap that? If you think about it unemotionally, yeah, your car is valuable, your house is valuable. But if you look at our lives and our ability to create income, it's like if we
not
were
even
just a
close.
machine, if you just take my input output and just say, I have a money printing machine, that would be the first thing I would insure. Because I'm
100%.
like, if that machine stops working, everything that I'm doing falls apart.
Right.
And yet, a lot of times we don't get it, or we're selfish and we're like, well, if something happens to me, it's other people's problem. And we're not unemotional about saying, listen, if I have an asset that's worth 50 million, I probably shouldn't insure it for 50 million.
I think part of it is the fact that nobody really wants to think about dying.
Right. Yeah.
Like
It's gonna happen.
no one really wants to think, and no one can comprehend it. Like
Yeah.
no one can really comprehend like what happens. No one
Right.
really knows.
Yeah.
Like you're a believer of Christ.
Yeah.
I am
Yeah.
as well.
Yeah.
I have beliefs. I have
Yeah.
faith, but nobody really knows. So it's
Yeah.
like most people just can't comprehend. Like, why am I going to
Yeah. It's
insure?
not a fun thing to think about.
Right.
Yeah.
But I think the older you get, especially for me, I start realizing that this thing called life has a expiration date.
Mm-hmm.
My runway is going to stop at some point.
Right.
I just don't know when.
Right.
So how can I give the most impact while I'm here? How can I have my money have more uses while I'm
Right.
here? It's to first put it into this asset because, again, it gives you all those other things. Like I have a video where I'm saying you probably have insurance in your car, but there's no guarantee you're ever going to wreck the car.
Right.
You probably have insurance in your house. There's no guarantee you'll ever have to use it.
Right.
You probably have insurance on your phone. There's no guarantee you're going to drop that phone.
Yeah.
You're guaranteed to die.
It's
Yet
good, man.
you don't have insurance on that. It makes no sense.
Right.
Right? And we can get into like really, really ninja moves, what I know you do and
Yeah.
I do, where you can take this and put it on another level where death benefits are paid out tax-free, right?
Yep. Income tax free.
Income tax, not a state tax, but income tax, which I think states anything over 21 or 22.
It will probably change depending in the future, but yeah.
But-
Family, single, yes.
Income
We're-
100%
yeah.
tax-free. So I think about it like if right now my family got 40 million bucks or 30 million if I die,
Yep.
do they know what to do with it? Do they know how to protect it? Do they know how
Right.
to multiply it? Do they know how to grow it? Probably not, right? Especially if me and my wife die and my daughters get that much,
Yeah.
they're probably broke before their life is over. And if not, their kids, my grandkids, would be broke. So what did I do? I set up a trust. So now the trust dictates as a succession plan when I die, when that happens.
What happens?
Money goes into the trust because that's the beneficiary. What's the trust going to do with the money? The trust dictates it has to go into more policies built like this where you can use it, the family can use the money, but the trust gets wealthier and wealthier because everyone's going to die at some point.
Yep.
And the trust dictates money can't just be spent on anything. It has to go into a policy first.
Yep.
Then policy loans can be taken. And it's just a roadmap of how I would use money. Even when I'm gone, the
Yeah.
trust will use it the same way.
It's interesting. Love that. Rockefeller's very much inspired a lot of that mentality. It's interesting because in planning, you always want to look at like what are the points that we know are going to happen, and death is one of those points. So if you know that's going to happen in the future, it's like how do we optimize an event that we don't know if we're going to get hit by a tornado or a hurricane, just like what you said, but we know this is going to happen. And I think that's where having someone else that's unemotional about your situation, being like, okay, I'm unemotionally looking at your situation. How do we optimize? How do we make it better? Versus being like, hey, it is hard even to think about like, hey, I'm setting things up. I'm planting trees that I will never be able to eat from. Mm-hmm. That's an admirable way of thinking, but I do believe it makes you richer and wealthier while you're alive. Because you show up differently knowing like, hey, I'm worth $30 million. Like I literally, like my time, like I'm worth that. I think there's something really special about that. I think it's like
100%.
It's the same concept of like flying first class and all those things. I know you probably get that more than I'm less immaterial, but like you feel different driving a sports car versus a regular car. Mm-hmm. Same thing. It's like, when you're worth that much, like you show up differently. Let's move on to. I'm curious about your portfolio. You're in a lot of interviews, but I don't think people ask you these deep questions because of a lack of how life insurance works. So do you know how much cash value you have on just your life insurance policies, or like the ones that you're responsible for? You have ownership.
As of right now?
Yeah, as of right now.
Not much. I don't keep a lot in there because I want to deploy it.
Okay, so let me ask a different question. What is your annual premiums going in?
Almost 700.
Okay, what is the base on that? That's like the required premium.
I'm not sure. It depends. Like I've got some that are 50-50 design, one even 60-40. So 60 to base, 40 to PUA. That's on my new daughter.
Okay. So are we looking like 350 to 400,000 of annual premium going to base?
Probably a little less.
Okay.
So I'd say average is probably like 30% base.
Okay.
And 70% PUA.
Okay. So 300,000 of base. That's the required premium. Your funding and the way that you think about money is like, hey, you don't want a ton of cash value. So you don't have a lot of cash value sitting. You're borrowing against it to do other things. Mm-hmm. Okay. Is that fair? And you're investing in business, you're investing in real estate. What are the type of investments that you're doing? Again, not investment advice. Don't sue either of us. I'm asking you as a friend.
So funny because you just put that disclosure. I was going to say it.
We have a family. Please don't sue us.
This is not investment advice. It's just what I do.
Yeah.
So all the money goes to Whole Life First. I've got 14 policies. So as you make more money, you can't put too much into one. So I just got to keep getting more. And what I do a lot of is private lending. So I'll lend to different investors, people I know have a really good track record, and I love their business model. So I always want them to have skin in the game. I want to be in first lien position, and I want a personal guarantee. So I'll lend on those things, and then that's where most of my money goes because that's a safe, I've got collateral, I make 15%.
A lot of times 15% and safe aren't in the same.
Right. But this is, again, backed by first lien position, personal guarantee. The operators put their money up to buy. It's basically a development company. They'll put their money up to buy the land, and then they'll raise the capital to excavate and build single-family home communities from the ground up.
Okay.
And then they'll keep some for rentals. They'll sell some off. So 15% is like their top. It's a ladder. So if you come in at $100,000, they're paying 12. As you go up, you get over $1 million, they're paying 15. So that's what I do most of because it's the safest, and it's 15%. And then I'll do some more riskier things. Like I'm about to invest in a cannabis company, which could potentially give me like an 8 times return on my money in 2 years. I'll invest in my own real estate. So I've got some apartment buildings where I'm the bank on it. So I'm pulling the funds from the policy. I'm giving it to do all the construction and all that stuff. And then the back end, I've got a property.
Okay. So when you get the money, are you just putting it back into the deals, or are you putting it back, you paying back your life insurance policies? How does that work? Because the next question I'm going to ask you is how much money do you have as a reserve emergency account? Like everything hits the fan. You're making cash flow today. And I just want to be upfront, like do your due diligence. And when you think you do your due diligence, do it more.
Right.
And I would really be skeptical 15% debt. Like I would really want to know like operators and all, but I do know people close to me who have like really, really billionaires that they make, 9-10% on debt. Like, so it's possible out there. It's like 2008, you and I didn't like you maybe lived more of it than I did.
Yeah.
I just feel like a lot of like the secure, safe things hit the fan.
Right.
That I'm all a skeptic when it comes to that. That's why I think diversification is good. But like, let's talk about where you're getting those cash flows coming back. What are you actually doing with that money? Is it going?
Great question. So what I'm doing is I've got a HELOC, home equity line of credit on my house. It's about $500,000 I have access to. So if that's leverage, I'm paying that back first because it's a higher interest.
Higher interest
right?
rate.
So it's like 9% right now. Policy loans are like 5%.
Okay.
So it makes more sense as I have cash flow coming in, pay it towards the equity line. That's me storing money in that equity line that I can use again, but I'm paying down a 9% instead of paying down a 5% to store the money there.
Yep.
Right. And when I said I don't have much in cash value, I still have a couple $100,000.
Okay.
I just don't want a bunch sitting.
Got it.
Right.
Yep.
So if I took $200,000, let's call it, lent it at 15%, it's $30,000 a year. Right. It's not a ton, but it's sitting in a policy doing nothing.
Right.
For the most part,
Right.
it's a safety net in case anything happens. I've got $200,000 I can access.
Yeah.
On equity line, I think we've got 300 available.
Yeah.
So 500 there. Across bank accounts, I probably keep $10,000 per account.
Okay.
So we've got maybe 100 something there. So altogether, just shy of $1 million, probably just liquidity.
Okay.
Because it matters.
It matters a
Liquidity
lot.
matters. One thing that I always touch on. Liquidity definitely matters because it lets you sleep at night. If you're totally leveraged, you've got no money in the bank, no money in policies, no money in anything.
Yep.
It's hard to sleep at night.
And what I do, and this might be extreme, I try to do a ton of due diligence on investing. And then when I invest, I mentally am like, I'm never going to see that money again. And so I design my financial life that if everything hits the fan on an investment side, I can ride the ship. And that's just so I keep quite a bit of liquidity. Morgan Housel, the person that wrote Psychology of Money, he talks like you should almost have too much, like you should almost have more liquidity than you're like, wow, like I'm dumb. Like I'm losing opportunities here. But I'm telling you, if you just listen to that, and especially if you're an entrepreneur and investor, The Psychology of Money, Morgan Housel, highly recommend that book for all of our listeners. But he just talks about like even Warren Buffett, billions of dollars sitting on cash. And he does it like 20 years from now, we'll look back and be like, that's why he did that. And people are thinking like, you're an idiot. You could have this money deployed in the market and all this stuff. But there's like the golden rule, R. Nelson Nash, those who have the gold make the rules.
Yep.
My next question is, you're continuing to fund more life insurance. Do you ever worry? And I know that we all need to be about abundance. But do you worry that if you hit things in your income, that you have such a big nut that you have to fund? And like, does that ever, like, again, I know it's like, maybe we're different people. Like I'm abundant in one hand, but I'm also like, from a cash flow perspective, I would be like, I would be hedging, and this is just me being like vulnerable and asking you questions about like, when I look at your situation, I go like, man, this works until you stop making as much money.
Right.
And then it gets a little sketchy.
Right.
If you stop making income, that's where it's like the way that we advise entrepreneurs might be different than if you were a W-2 employee not having an increase, what you're saying is not possible. It partly works because you, and knowing you're going to continue to make more money, or that's what your plan is.
Right.
If you have a bad years or if you get crushed, potentially you're over leveraged on life insurance, taking a safe asset and making it risky. What's your thoughts on that?
Great question. I don't really think of it because I know without a doubt the value that I have. Again, it's all about building myself up, becoming more valuable. I know without a doubt if I lost it all tomorrow, I could get it all back.
Right.
I know that without a doubt. And that's part of the battle, is just knowing you're worth something.
Yeah.
You're worthy of it.
Yeah.
Right. Again, going back to my wife, like I never was worthy of having a woman like that.
Yeah.
And then I became worthy of her. And now like I know I'm worthy of her.
Yeah.
I know that I make her better. She makes me better.
Yeah.
So it's the same thing with money is like, I know I'm worthy of the money I'm making and I'm worthy of more.
Yeah.
So that's why I keep making more.
And do you also like the pressure? Do you also like, okay, I need to make enough to fund $2 million of life insurance a year?
I do like the pressure.
Yeah.
Yeah. Yeah. And it's one of those things where my wife also does really well.
Yeah.
You know, W-2'd, she's made $700,000 in a year.
Yeah.
So it's like, there's not a ton of pressure on me
Yeah.
because she does well.
Yeah. But right now it's good times.
Right.
The beautiful thing is the right type of people, the right type of killers will make more in bad times.
Right. She made the most during COVID, 2020, $720,000 as a W-2 employee. When everything was hitting the fan, she crushed it.
Yeah.
So, yeah, I don't really worry about that. I think the mind's a powerful thing.
Yep.
And the second you start worrying about things, you're just attracting it to you.
Yeah.
You know, so I play the mind game a lot. I talk to myself a lot. I mean, if you really think about it, the only person that you're around 24/7 is yourself.
Yeah, that's right.
And self-talk can be very negative.
Yep.
And it can be positive.
Yeah.
And I'm not saying I'm some saint. I'm always in a positive mindset, but I pretty much am most of the time because of the self-talk I have.
Yeah, and I can attest, being your friend, being someone who's around you, you're always in a good mood, high energy. That's part of the reason why we're probably friends. Is I would like to say I'm similar to that. Like,
Right.
you know, it's like you have a choice. It's like, why complain?
Right.
Life is good.
Dude, if you complain, most of the people don't care.
Yeah. Yep.
Or they're just happy that it's not happening to them.
Here's my big takeaway when it comes to life insurance, when it comes to finances. People really got to understand their situations. Mm-hmm. People can take inspiration on my videos, my book, your videos, what you have going on. They really got to take ownership. And like, there's no silver bullets. There's no magical vitamins that will be able to solve all your problems.
Right.
So life insurance is a tool. Life insurance is a powerful tool. I think we need to make this a clip, or like make this like, people need to understand how we are talking about wrapper, multi-use, single use. Love that. Mm-hmm. But at the end of the day, you have to understand your financial situation, take ownership of it. And I know that there's a lot of people that are getting insurance on their family because of you, because of your videos. And I'm excited to see what happens in the future.